base with you in the next few days. Well, as promised, let's hop across to Rupen Rajguru, Head of Equity Investment and Strategy as Julius Baer, who joins in. Hi, Rupen. First season's greetings and thanks so much for joining in. Our markets have been resilient. That's really been the big theme, and we have decoupled from what the globe has been doing, which is pretty good news. My question to you is, at this juncture, are you still constructive or are you getting a little bit cautious on the Indian markets?
Okay, hi. Good afternoon, Nigel, and wish you and all your viewers a very happy, peaceful, and profitable Samvat 2079. You are absolutely right that Indian market have been, so to say, the star market in the entire globe this year, one of those large markets. And I think there are a couple of reasons for attributed to that. One is, after a long haul, our earnings momentum has come back significantly. So between 2020 and 2022, the Nifty earnings have compounded by 30%. And between 22 and 24, if I were to just go by general consensus, the expectation is around 15% growth. So I don't think so any other country, large country globally, will have such kind of earnings momentum. Secondly, also from a macro standpoint, India never overstimulated its economy. So while globally people are unwinding, India probably does not have to do much of unwinding of liquidity while we have to hike our interest rates. But at an aggregate level, our macros are much better. And finally, the domestic flows have been resilient. From the market perspective, while at an index level, as I spoke with you last month, we don't see a big upside from where we are currently. But there will always be stock-specific bottom-up opportunities which are there, and probably that will be an interesting part in India going ahead. So to answer your question, no significant upside, at least over next few months at an index level, but definitely there will be stock and sector-specific opportunities.
Right, Rupen, season's greetings to you, your family, as well as your team as well. You spoke about sector-specific opportunities. I'm looking at the cement pack today. It's making a bit of a comeback. We have Ultratech, which is moved off the lows. At the high point of trade today, we have ACC, Ambuja, India Cements doing extremely well as well. Do you expect some sort of margin improvement in the third quarter? And if one has to play this, how does one play it? I mean, through the large players or through the mid-cap ones who are trading at sub-replacement valuations?
Sure. Yeah, hi, afternoon, Mangalam. This quarter two probably will be one of the worst quarter as far as numbers are concerned for all cement players. Already a lot of players have declared their numbers. And because this quarter was double whammy, the pricing was also lower, and plus it was seasonally weak and the input cost had gone up significantly. So come December, we will definitely see improvement in all counts, volume, pricing, as well as the cost coming down. So we'll see a sharp quarter-on-quarter improvement in the December quarter. So from a overall sector perspective, as we are expecting the overall economy of India also to have a good momentum in the run-up to the election, and typically cements as a sector does well pre-election, we expect over next 3 years at an industry level volume growth of close to 7 to 8% versus the supply growth, which will be closer to 5%. So in that context, it is in a sweet spot. From a player perspective, definitely, we will have a barbell strategy wherein on one end we will have the large or the player who has a pan-India presence, because as I said, this sector is going to do well across, and also some mid-cap names, because definitely after the one big M&A which has happened, there are expectation of more M&As out there. So some good mid-cap players which is region specific, having a decent capacity also would be something to watch out for. So some of the players which are at sub $80-90 valuation would definitely look interesting.
Okay. Rupen, hi, good afternoon. So, how do you play this volatile market in terms of themes? You referred to some of them, but what do you think could be the big themes to follow over the next, say, 12 to 18 months? And which are the spaces to avoid entirely?
Hi, afternoon, Sonia. The themes which we like are probably, typically we like structural themes vis-a-vis the cyclical themes. And within structural themes, we look on to which theme has a tailwind. So currently, as we speak, over next 2 to 3 years, the domestic focus companies have a tailwind. Definitely, financials is a big theme which I've been talking to you guys for a long time, which we like. So that's a big theme to play. Along with that, I mentioned about cement. Uh, as a capex as a theme we like, but what has happened, the capital good companies, the stocks have just gone up significantly. So while we probably at the current juncture, probably we would like more of companies which are into project management and execution, because the valuations there have not gone up as much as the capital good or the product companies. So that's the other segment which we like. From a avoid perspective, if we are going to get into, even if it were to be a technical global recession, so the global plays is something which we would avoid. While IT as a sector has seen a decent correction this year, but I would say we would still be avoiding mid-cap ITs, wherein large-cap ITs definitely at a price point starts to look interesting. So some of the, not the top two, but the number three, number four IT companies whose valuations have now gone down to say 17 on a multiple basis, those have started to look interesting, but we'll avoid mid-cap ITs. And probably selective, while we like healthcare, but we are selective on pharma stocks as well. Okay. And we'll avoid some of the commodity plays, because if we were to get into a global recession, those sectors will get definitely more impacted.
Okay, all right, Rupen, so you're saying mid-cap IT is what you'll avoid. From large-cap IT, you like the larger cap names that maybe not in the top two, but the others which have a bit of valuation comfort. Just putting that together, that could be HCL Tech Mahindra. You didn't say it. I'm just trying to zero down on a couple of those names because that's what's fitting the bill. Let's talk about the auto space though. One consensus is definitely banks, financials. Some part of the street still believes that autos have some steam in that. Do you think so as well?
Automobiles had a terrible cycle from say 2018 till 2021, right? And we have just seen last few quarters wherein the numbers have started to pick up. So from a sector per se, what we believe that next 1 to 1.5 years, definitely the sector will see a revival in volumes, because all the concerns which were there, the chip concern which was there last year is no longer there. The input costs which had gone up are also now easing. The oil price also, while it has not come up significantly, but still lower than what it was some time back. So all those tailwinds are there. And finally, what we are seeing, also the pent-up demand is there. So our pecking order in the auto, while would be, we like CVs, so they're probably the second largest player is something which we like, and then comes four-wheelers, and there again the leader is something which had lost market share, and now it's fighting back to regain market share, and that is something which we like. And the least preferred would be the two-wheelers, because there the competitive intensity is very high, and we have already seen the EV penetration, at least in two-wheelers, is significantly going up, and probably not many listed players are, barring one, are very much entrenched into the EV game in two-wheeler side. So that would be our pecking order in autos. So to sum up, while we believe that the stocks have gone up, but still, at least for next few quarters, there is good growth which one can see.
Right. Rupen, I'm interested in your contra strategy, because I'm just looking at it in terms of healthcare. You're looking at diagnostics and hospitals. That's a contra positive that you have here. I mean, we've seen a 30 to 50% correction in all these diagnostic players, and that's primarily because, post-COVID, there has been a drop in the tests that they're doing. And at the same time, even hospitals, we've seen a cut of anywhere between 16 to 25% in the larger players that we have there. What makes you positive about this space? Is it just the valuations after the correction, or do you believe something can change?
You partially answered it, Mangalam. I think last year they were darlings, and at least in our mind, nothing could go wrong with especially diagnostic plays. So what had happened last year, there was a bump up in their revenue thanks to COVID. And on that higher revenue and higher margin and profitability, market gave a even higher multiple. Currently, we are seeing exactly the reverse of that. So now that COVID-related bump up is no longer there in the revenues. Plus, there has been negative operating leverage. Margins have come off, and while ROCs are still healthy, but probably majority of things which can go wrong have gone wrong. But the question which we have to ask is the structural story still there, or it's gone? We strongly believe that from an India perspective, or diagnostic as a play at a big level, we believe it's a shift from unorganized to organized. So the organized guys will get higher market share. So that's theme is very much there. And secondly, also while the competitive intensity is there, but probably with a better health insurance coverage, the volumes and business for diagnostic player will definitely go up. So we remain positive on that theme from next 2 to 3 year perspective, while there might be some quarterly moments here and there. So we like that. And similarly for hospitals, probably we like those hospitals which are which have done their capex, and we believe that it would be a good operating leverage play. Some of the hospitals which have done capex and will be a pan-India players is something which we like.
Okay, all right. We will leave it at that. Rupen, have a great one. Thanks a lot for joining in. And once again, happy Diwali to you and your entire team at Julius Baer. Let's do one thing. Let's take a quick commercial break.